Hey, what's going on, everybody? We're going to get started here shortly. Just give us a few moments, just get everything wound up. It's a little bit before the start time, but that's a-okay. Yep, see, that's how you know we're live. That's how you know we're live. Things happen on accident. So, hey, guys, we're going to get started here shortly. Um, it's a little bit before 1 o'clock. I know the start time's 1 o'clock, but we'll get started. Lots to talk about. So just hang in there. Let me get things wound up and get things going. Make sure everything's on. All right. So we got. Let's see here. So we got Facebook going. We got YouTube going. All right. All right. YouTube. Hey, hey. Facebook. Hey, hey. I think we're on a couple of places, actually a few places on Facebook. So if you guys want to make sure you get this, you can always check out the Real Estate with Chris Brown Facebook page. You guys will always get that information there. So be sure to chime into that. But ultimately, yeah, you guys go to the YouTube channel, you guys get that information too. So a couple more minutes here. We're going to get started. It's Friday, guys. It's Friday. Yes, yes, yes. Thank God it's Friday. Make sure we get everything else going and get everything else started. That yo. All right, all right. All right, all right. Let's see here. What are we gonna do? All right, we're gonna get started in about 2 minutes. It's a little bit after 1 o'clock. It's 1:01, so we'll start about 1:03. I know you guys got other things going on today. It is Friday, so hopefully you're finalizing contracts, getting things done, getting business done, so that you guys can have an enjoyable weekend. So let's see here. For those who want me to switch it up, I know some of you guys got jokes and well, staring at me the whole time. So we'll switch it over for you guys. That out the way. Awesome, awesome. Yeah, there we go. There we go. All right, 1 minute till we get started, guys. 1 minute. So grab your popcorn, grab your soda or your water. The alkaline water, that's the new thing right now. Make sure you guys get your alkaline water. Get that in you. All right. All right, so guys, hey, welcome to another episode of State of the Real Estate Market. I appreciate you guys tuning in, being a part of this. So we greatly appreciate it. Let's do this. Show me a little bit. So, hey guys, welcome to State of the Real Estate Market with yours truly, Chris Brown, real estate professional and marketing entrepreneur. I just want to make sure you guys are getting the insight of what is going on in the market, and that's what we are bringing to you live today. So get that going. We're bringing this to you live today. It is the June market update, and people are wondering, what is going on? It's been the question since the beginning of the year. What is going on with the real estate market? What is really happening? And what should we expect? Is this market going to crash? But hey, I told you guys before, crashing is not an option at this time. So don't anticipate the market to crash. But for those who are tuning in for the first time, welcome to State of the Real Estate Market with yours truly, Chris Brown. This is a platform that we not only talk about buying, selling, and investing in real estate, but we also talk about generational wealth as well as hot topics regarding entrepreneurship. Go ahead and be sure to like and subscribe to our YouTube channel. We are on multiple platforms, so we definitely want you guys to be a part of that so that you guys are getting the latest and scoops. As I mentioned, I kind of let it leak a little bit last month with the market update that we are going to be launching a investor type of course, and we want to make sure that you guys are getting that information. You guys are trying to build generational wealth through real estate. You guys gotta get this. This is going to be a new release, something that you guys really want to check out, and something that you guys are going to really appreciate. So definitely be sure to stay tuned for that information. But let's go ahead and dive in. Let's dive into what we've all been waiting for, and that is this market update. Let's start us off. What to expect with the housing market for the rest of 2024. So, guys, we are still at a standstill. Everybody, all these gurus were expecting the market to take off in the spring, but that's not the case. And guys, interest rates have not budged much, maybe a smidgen. And I have a report I want to share with you guys, but this market right now is just hectic. People can't predict it. This is also an election year that I keep telling you guys about. When it's election season, things always happen, but it's just been a wild situation for anybody if you're buying or even selling real estate. And I say that on the residential side because there's just been a large impact with that, especially with these interest rates, and it's really showing. Inventory is low right now for a number of reasons. It's starting to pick up. I know for the state of Florida, inventory is definitely picking up, but when I say inventory, that's the one thing that we all have to be mindful. One thing that people have to be mindful for is what type of inventory, and it's what it is. It's a lot of new construction. A lot of new construction is being built right now, and it's catching up. And basically what happens if you have a home that is a resale, your competition is going to be new construction unless you have something that's unique. One of the big things that I've been getting from potential buyers as well as from the sellers, they're letting me know like, hey, I have this home that I want to put up on the market. And I said, well, what's some of the special features? One, it may have a pool. Two, if there's no HOA, that's a big thing right now. A lot of people are trying to find properties with no HOA or a property with land. So that is a big thing. Everybody wants land right now because it gives you the option. If you can get into something now and you want to add or do something different, you'll have the land to do so. If you ever lived in an HOA community, sometimes people have their mixed views about HOAs. I know it's another bill. Some people say, oh, it's an additional fee that people are charging. Why are they charging all this extra money? But at the same time, if you do have an HOA in your community, one of the big benefits I always tell people is that they're going to help maintain the value of your home. So when you're not in an HOA community, those rules that aren't put in place, you can have an next door neighbor in a non-HOA that may have a property that is run down. They're not keeping up with it. They're not keeping the driveway done. They're not keeping it painted. However, if you're in a community with a HOA, they're going to maintain that. So if somebody's driving, they're not going to say, ooh, that house is nice. Then they look at the next house and look, ooh, that looks like a shack. No, that's not going to happen in HOA communities. Primarily, reason being is because you're going to have those HOA folks all over the individual that owns that property to make sure that they're maintaining it. Now, there are older communities with that, with an HOA, and it may be $100 per year. So it's really not say, strictly enforced HOA. So also keep in mind, if you're one of those individuals that are in a community that has an HOA, but you're looking to sell your property, mention some of the things about that HOA, especially if it's less than $100 per year. You have some communities where they're paying a few $100s per month for the HOA. So keep that in mind when you're trying to get your property sold. Uh, Interest rates, there's still an issue with the market, and it's no easier way of putting it. The interest rates are impacting the market. Buyers' interest in buying homes right now has decreased. Their motivation to buy a home, it's all about the interest rates right now because it's taken so many people out of the market. And then when people find what they're looking for, they're looking at the high interest rates. They're also looking at the higher prices because right now the prices, they have not dropped like a lot of people are saying. A lot of people who are looking at price reductions, they're seeing that in the market. It's happening on, look at the type of property. Is it a resale or new construction? You're seeing it a lot more with the resale. It's because a lot of those owners are just putting those properties out there, not really watching the market. And then also they are watching the market and they're seeing that the properties are actually sitting. So people aren't jumping at those homes right away. So keep that in mind. Interest rates are truly impacting the real estate market. It really stinks for our first-time home buyers because for those who were in the market, say 4 years ago, first-time home buyers, there was so many programs that were out there that people were getting into these homes, like nice brand new homes, and for a little bit above 200 or 200,000, 4-bedroom, 2-bath, 2-car garage, just about 2,000 square feet. That's what was going on in the Tampa Bay market. These homes, these were brand new homes. And first-time home buyers were eating it up. People who were moving down in properties, they were getting a brand new home. They were able to transition from an older home to a brand new home. And the interest rates were, that 3%, around that 3%. So interest rates right now, with them being high, it has been an issue, something that's not new to everyone. It's not new. People know that the interest rates are a serious issue and serious concern. With that also being said, the prices have still been going up. They're not going up as fast as they were before. And I'm going to speak on my market. And I'm in the Tampa Bay market. I'll speak on my market because I know every market is different. But for the general fact, you're not seeing any big crashes or big reductions in prices for real estate right now. A lot of people were anticipating that, expecting that to happen. It hasn't happened. If you are in the market and you're selling your home, really focus on the market and see what properties are actually selling for. And then when the properties that are actually selling, be sure to be mindful of how long they're actually staying on the market. And one of the big things that a lot of people, they're looking at these prices, you have to look at what is actually selling versus what is actually being placed on the market. Because you're going to see properties that are out there on the market and they have a high price. It's like, oh, my house is just like that. How are they going to get that for that? Why are they asking that amount for that particular home? It's because they may want to see what the market is doing. I mean, because at the end of the day, a buyer determines the value of a home and the price of a home. Because if they're willing to pay what you're asking, that's the price they're willing to pay. Now, if they're willing to pay more, then that shows that your home is worth more. Now, if they're not willing to pay that, either one of those amounts, then they're willing to pay less. And that's how they're determining the value of the market. So keep that in mind, guys, especially my sellers. I always get messages from different sellers. They're always reaching out to me saying, hey, I saw your information online and you're always talking about the market. And, what do you think my house is sell for? At the end of the day, you can always do like a quick, simple desktop value for your home. I always tell people we can do those. I always have a link that's available that you guys can get the value of your home. That's something that I do for free for you guys. It gives you a general desktop review of your home. Obviously, no one's actually seen the home. No one's actually been inside. No one's aware of any updates. But basically what it does is gives you the comps of the surrounding property, letting you know what properties have actually sold. And that it gives you a whole report. And you guys get that for free. So be sure to take a look at that link if you guys haven't done so already. Or just reach out to me. A lot of people reach out to me and I'll send them the link and they'll go ahead and put the property information in. And you have a report like less than 2 minutes. The whole process takes less than 2 minutes. And it's a general report. Like I said, it's very general, but it gives you a report because no one's actually placed eyes on it. In my business, I always look at the property twice. I like to go out, do an initial review of the property, see what updates have been actually done, get some eyes on the actual property, especially in today's market. You really want to get eyes on the property, see what details that the homeowner has placed into the property, as well as seeing if there's any lack in maintenance. Because at the end of the day, that's going to impact the purchase price and the interest of any potential buyer. So that's always a good thing. So I get that information first, go back to my office, tally it up, and then come back out for a second visit. So 2 touches to help you get your value of your home. And that's a more extensive process, but the desktop review is available. What else we got here? Is there a market crash foreseeable in the near future? I'm not seeing it with, catch my words here, I'm not seeing it with residential because properties are being sold. What we're finding out is you may find, especially in my market, you're finding that a lot more new construction homes are actually selling, or homes with special features. I'm in Florida, Tampa Bay. People are looking for homes with pools. People are looking for homes with land. People are looking to exercise or utilize their benefits, say VA benefits. FHA is still there, guys. It's just that homes are a bit more priced. So those benefits, people are utilizing those benefits. FHA is 3.5% down. So you can't go wrong with that. And there's programs out there, grant programs that are out there that you can be a part of and still get the no money or close to no money down with those properties. It is a process. It is a qualifying process. However, at the end of the day, if it's a situation where you know you're qualified to make that happen, definitely speak with a mortgage professional. Not every mortgage professional is built the same, just because everyone has different programs to offer. So keep that in mind. But reason I was hinting to, I'm not seeing it in the residential side is because someone brought this up to me. I was doing, as part of a group. Actually, this happened last night. I was part of a group and they're talking about, what about commercial? What's going on with the commercial loans? Now, if you guys are familiar with commercial loans, a lot of those commercial loans are like I think they were like 5, 7, and 10, 5, 7, 15 years on when you do a mortgage. Typically, when you do a mortgage or you get a loan on a residential property, it's for 30 years. So that being said, what happens is traditionally when those loans come to mature, individuals, they have to actually refinance if they're in the commercial world. So they're going from a property that they purchased maybe with 3% interest rate, and they're going to have to refinance. So now if they're going to have to refinance, what are the interest rates now? A lot of them, those interest rates have doubled. So if the interest rates have doubled for commercial, if they're refinancing into a doubled interest rate, how does that impact their bottom line? Especially if this is multi-unit, because multi-unit, it's ran off of the numbers. You know, is it still going to allow them to cash flow? Are you still cash flowing as much? Is it going to put you in a hole if you have to refinance and your interest rate is way higher than, say, 6%, 7%, 9%? You know, how does that impact it? Does that mean that you got to raise your rental rates? But are your rental rates already high? Because a lot of people were banking on the higher interest rates. So they were saying, hey, they're banking on the higher rental payments. So that's how they were already making money, because the rental rates were so high. But now that the interest rates may change for commercial because they have to refinance or they have to sell that property, how is that going to impact it? So that was brought up to me last night. I thought I'd just kind of just drop that in there. But that is something to kind of think about, because how is that going to impact commercial moving forward, especially if they're in a position where they have to refinance or even sell a property? We know things are moving slow right now. So is this an opportunity in the commercial world? That's a thought. That is a thought. So keep in mind, it's always about being prepared. Every market, there's opportunity. Even if we say that it's a bad market, there's always opportunity that's there. So one of the other things I did want to share with you guys is some of the articles. Because like I said, I'm one of those individuals that will tell you about everything that's going on, and I want you guys to know what's going on. And not only that, let you know that it's not just me making this stuff up. So I'm not just making this information up. This information is coming from very credible resources, and that's what I want to share with you guys. So one of the first resources that I want to share with you is Yahoo Finance. And there's an article here where Yahoo Finance was saying that basically the Federal Reserve, they gave bad information, or excuse me, bad news. I won't say bad information. They gave bad news. Basically meaning with them is the Federal Reserve delivered bad news for the housing market this week. So there was another report that came out, and the Federal Reserve did not give anything that was very promising. So with that being said, they had a cautionary update this week indicating fewer anticipated interest rate cuts than previously expected. So I know with the last previous meeting, there was expected that, hey, we are going into the second half of the year. This has got to start turning around at some point soon. So with that being said, we are still in a situation where the rates are still up there. And as you guys can see, the rates are still up there. There's still a situation where we're not making progress. People are still, being reserved if they should go ahead and buy a home right now or whatever their situation may be. Obviously big influential people are chiming in and they're giving their advice and their suggestion on the whole thing as in, what to expect. But at the end of the day, interest rates are still up. And it is impacting the market. Interest rates are up, rental rates are up, prices are up. Everything's up. So I don't know if everything is going to come down, but something has to adjust. And once something does adjust, that's when we should start seeing additional interest. So another one article is kind of funny because it's from the New York Times. New York Times says the housing market is weird. So it kind of reminds me of Portland, keeping it weird. So it's weird and ugly. And they actually have 5 rhyme and reasons why the market is the way that they say it is. 1, it's hard to find a home to buy. Inventory is low, guys. Keep that in mind. I'm working with some folks right now. We're going out looking at properties, and it's like, before we were out every day. Every day. While we were out, properties were being released to the market. That's not the case right now. Now it's like, okay, we're at the beginning of the week. Okay, well, what's available? Well, okay, well, we got 1 or 2 properties. Well, we can wait to the end of the week, see what else becomes available, and then we can go look to see if those are meet your criteria. So inventory is low right now. Existing single-family homes for sale. And as you guys can see this chart right here, you can see where back in 2010 it was very high. And you just kind of keep seeing it's going down, 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 downward trend, okay? So it's hard to find a home to buy. That was number 1, or one of them. I say one of them. Homes are unaffordable, income needed, and because they're unaffordable, they're saying that the prices are going up, but then it means that because the prices are going up and the interest rates are going up. So what does that mean? So that means that you have to make more money. If you're not making more money, then you're in a situation where the home's not affordable to you. And as you guys see this chart right here, it's trending upwards. So that means the required income for a household to purchase a home, or for a family to purchase a home, they have to make more income. But the household incomes haven't really increased. It's not like people are making more money nowadays. They're not. They're making about the same amount of money, but everything has gotten more expensive. Hint, hint, inflation. So that's something that we really have to keep an eye on, and that's what's been going on. As you guys can see, that information is trending upwards. A third item, we scroll right through. Scroll right through this. New homes are filling some of the gap. And this is something I told you guys that was coming down the pipeline. New construction is starting to catch up. New construction got way behind. Remember during the pandemic, new construction, people, you can buy any of the materials. You can buy anything. So what was happening? People were placing their current property on the market and they were actually getting money for it. So with that being said, that's what created that demand for the resale of properties. But now that that demand has slowed, new construction is starting to catch up. Now they have to play the game where they're catching up, but then it's also at the same time, okay, are people actually buying these homes that we're actually building? Because they don't want to sit on a bunch of inventory of homes. So, but they are filling the gap partially at this time, but they are catching up. Rents are unaffordable. Yeah, I think we all know this. Rents are definitely way up there. I've looked at a couple of places, and I just see, like these new apartment buildings that are being built in the Tampa Bay area. Uh, Price points are way up there. For a studio, they're starting off, or one bedroom, starting off at $2,000, and it's a small studio or a one bedroom. And I've seen some of the construction of these. I'm still not understanding the construction where you see that it's got all wood framing. Everything's wood. And then they put like a finished concrete sidings on it and stuff. I'm curious if that's going to come up in the future. But people are building those and people are moving into them. So at the end of the day, rents are high, but people are moving into them. At least in Tampa Bay area, what's happening is we're getting a lot of people from out west. We're getting a lot of people from the Northeast where their rates are high already like that. And they're coming here willing because it's a little bit cheaper here. And they're willing to pay those higher prices. So at the end of the day, more people are probably going to flock to Florida. All right, and the fifth one here, a shift may be underway. So it's kind of predicting that we may see some type of shift. New single-family homes completed, but not yet sold. So that's basically, as you guys can see, this little trend. This is meaning that the properties aren't selling as fast. So they have to play that game. The new construction, they have to play that game. So they're waiting for these interest rates as well. Now, what has been happening is because they want to keep that trending upwards as low as possible, what has been happening, I've been telling people about new construction. New construction has a number of incentives right now. I know there's a number of builders here in the Tampa Bay area where they're giving like $30,000 to go towards your closing costs, as well as helping buy down the interest rate. So if your interest rate you're paying at 7%, they're buying it into the fives, buying it down into the fives, which makes the home a bit more affordable, and it makes sense for a lot of people. So it's also here what can be done to help incentivize people to buy these homes. So they're buying down the interest rates. Builders can kind of play that game a little bit, but at the same time, they're trying to maintain the value of their current homes as they're showing everything still rising. But at the same time, getting these properties off of the books, that's their main thing. They need to get the properties off of the books. So that was definitely five top things. And then another article here, this is from Fox Business News. Home builder warns real estate market is becoming a victim of its number one killer. And what is that right now? Interest rates. Interest rates is killing everything. It impacts so many things. People are saying how rates are impacting stocks and all other kinds of things that are going on, buyers and sellers. People who are trying to move up, move down, sellers, they're not able to do so, or they're thinking that I don't know if I want to move over there because now I'm going to pay a much higher interest rate. I just went from paying a much lower payment, but now I'm going to move into a property that, say, is smaller, but I'm going to be paying more. It doesn't make sense. Then you also have people who are in a situation where they bought a home, say, when the rates were at 3% or less. Now they're like, okay, well, this was supposed to be like just a step-up home or a first-time home, but it's starting to look more like a forever home, because it's like if the interest rates are going the way that they're going, they're like, I'm not moving from where it doesn't make financial sense for them to move. It's going to have to make some more sense, or something's going to have to force them to move or motivate them to move in order to pay higher rates. So keep that in mind, guys. I thought I wanted to share that with you guys. I don't want to keep you too long, but that's where we are with the state of the market right now. So if you are thinking about selling a home, if you bought it within the past 5 years and you have that low interest rate, and you may consider renting the property, renting it out for the next couple of years if you need to move elsewhere, because you could probably cash flow with the rental rates being as high as they are. You could probably get a renter in there, get a tenant in there. See, want a quality one. A lot of people try to rent their own homes on their own, and nah, I've heard some stories. So at the end of the day, it's more like, hey, make it make financial sense for you. Every family is different. If you're in a position where you have to sell and you're motivated to sell, go ahead and sell your property. Let's go ahead and see what the market is going to do. Come educated, understand the value of your home, hire a professional to help you understand what the market is actually doing. Information that I provide you guys is additional insight on the market, but at the same time, you want to speak with someone that's going to evaluate your home specifically. And that's one of the big values of having a real estate professional with you and understanding the market. But hey, guys, this is information that like I said, I've gathered it up. Keep an eye on it. A lot of the information that I've stated in the past has come true. It has happened, and it continues to. This is something that I do to be able to keep it on top of things, trying to bring you guys some value about the real estate market. If you guys are very curious about what is happening out there, just chime in. And if you guys have questions, people have been sending me questions, and I'll get those questions answered for them. I'll probably answer it in like a separate video, whatever it may be, or some type of response. But be sure to chime in. But once again, guys, I appreciate you coming on board here. Let's do this. Appreciate you guys coming on board. And what I would like for you guys to do, get you out here. Let's do this. Here's my contact information. If you guys feel like you want to reach out to me, you have questions, let me help you out. Let me see what I can do to get or facilitate a response for you guys. There we go. All right. Thank you. Hey, there you go. Always follow me on social media at ChrisBrownREPro. Once again, at ChrisBrownREPro. And hey, I wish you guys a happy Friday. Enjoy the rest of your weekend. And, be sure to like, subscribe to the YouTube channel. Like I said, it's not just a platform where we talk about buying, selling, and investing in real estate, but we will also talk about hot entrepreneur topics as well as building wealth. So take care, guys.